Hi everyone, I'm Joel Carty from Solace Financial. Today I'm joined by Dr. David Allen from Plato Investment Management. David brings over 20 years of experience in global equity markets. He began his career at JP Morgan in London, where he became one of their youngest ever managing directors and went on to manage a multi-billion euro long, short and absolute return fund, including a Euro hedge award-winning strategy. After returning to Sydney, David joined Plato, where he is now head of long-short strategies and co-head of research, managing the Plato Global Alpha Fund, one of Australia's top-performing global funds since inception. He is also a former professional rugby player, now president of the Eastern Suburbs Rugby Club, and holds a PhD in quantitative finance from Cambridge. But before we get stuck into our discussion, I'd like to quickly provide a general advice warning. As we go through today's discussion, we'll be discussing financial information which is general in nature, meaning it doesn't take into account your own objectives, financial situation or needs, so it's not a recommendation. It's important that you consider if what we discuss today is appropriate for you before acting on it. Also, please refer to any product disclosure statement regarding the financial product for further information. Details of this general advice warning can be found at the moneysmart.gov.au website.
Hi, Dave. Thanks for joining us today. To start things off, can you talk us through Plato's investment process and how do you identify quality businesses in the small to mid-sized cap space?
Sure thing, Joel. Thanks for having us on. Our approach to identifying small and mid cap, really, we're looking for four things. Firstly, it's got to be a great quality business where it's good earnings quality, management quality. Critically, the balance sheet's got to be very resilient. Most high quality companies, of course, though, they trade at premiums. We want to find the 1 in 10 that there is a margin of safety there. There's a discount. The third aspect, we want sentiment to be in our favour. And finally, we have a system of 150 red flags that we look at before we make any investment. Much like buying a house, really, you're looking for great quality house, good price, good trends in the neighbourhood, no termites in the basement.
Okay, so 150 red flags, that leads into my next question. How do you approach risk management, especially in the volatile global market like what we're seeing at the moment?
Sure thing. For me, the world is becoming increasingly driven, especially markets, by macro, thematic, geopolitical risk. And some people say, "Oh, you just block out the noise." I think that is a bit dangerous. I think you need to be aware of all of the different factors that could move your companies around. So we have 110 different stress tests that we run on our portfolios every day. Everything from for the last 6 months, we've been looking at the impact of a blockade of the Strait of Hormuz on our portfolios. We look at the impact of a gold shock, an unexpected election result, all these things that make for fantastic conversation. But I don't think they make you more money by trying to proactively position yourself. It's all about mitigating those different risks that can upend your returns.
Okay, well, what are some of the key opportunities and risks you're seeing in the markets at the moment, both locally and globally?
Sure. Well, locally, we've got a number of shorts in the construction space. Some of those we've had for a while. So construction, anyone who's building a house at the moment will know what construction prices have done. So well, aluminium up 20%, your shipping costs up 20%. So that just bleeds into everything. You've got even some suppliers, bag of cement has almost doubled. Okay, so
Wow.
that's really making life difficult for construction companies. So the names that were really struggling even before the war in Iran, name like Lend-Lease, we've been short that for almost 5 years. It's down 70% since we shorted it. That's definitely an opportunity where we look to monetize. So shorting for any of your listeners that aren't aware, that's actually taking a position where we believe the company's going to go down and turning that into outperformance for you. On the long side, so investing with a company globally, European defence has been a mega trend in the portfolio for some time, really since the war in Ukraine started, and that's only increased in importance more recently with Iran. Rolls-Royce, people might think of the car company, but really it's an aerospace and defence company that's up 600% since we bought it back in 2023.
Okay. Well, how does Plato differentiate itself from other fund managers in this space? And what would you say is your greatest strength as a portfolio manager?
Sure thing. So we mentioned before the 150 red flags. So that's fully automated, so systematized. I can bring up any company in the world out of well over 10,000 companies and instantly see what risk factors are lurking beneath the surface. It might be that they use a really unusual auditor, or maybe the stock price is down, and at that point the rats are leaving a sinking ship, and the directors are selling all their stock. It may be that there's a lot of related party transactions that are a concern, or maybe their accounting is really, really aggressive. Eight or more of our 150 red flags, on average, those companies will underperform the market by 20% over the next 12 months. It's actually the most powerful method we've ever developed for really doing two things. One, identifying good companies to short, so to bet against, but also capital preservation on the long side. Stop us from doing anything stupid. Buffett loves to say there's only two rules of investing. Rule number one, don't lose money. Rule number two, don't forget rule number one. The red flags helps us do that.
Sure. So can you share an example of a time when the fund's experienced a challenging period and how you've navigated through it to turn the performance around?
Sure thing. So the Plato Global Alpha strategy, it's been running for almost 5 years. It's actually been a really, really strong performance run. We've outperformed the market by an average of about 12.5% per year since inception. We've never had a down year. We've outperformed in 94% of rolling quarters. So we really haven't had a challenging period thus far. That said, we certainly will. And I was 15 years at JP Morgan in London, running money there as well. And the period that tends to be challenging for us is large junk rallies, where companies, irrespective of their quality, are rallying very, very aggressively. And that can be a challenging period. The good thing about that is that tends to be quite fleeting, and the quality rises to the surface before long.
Okay. So you've already mentioned some of the investment sectors that you've been leaning into recently. Can you elaborate more of other industries and the reason why the portfolio is leaning that way?
Sure thing. So, if you look in the tech space, we've been underweight software names, and that's been quite beneficial with the SaaS apocalypse that has occurred with software as a service companies have really been battered. So that's worked out well for us. But how are we playing that technology space? I think with emergent technologies, you want to be right at the top of the supply chain. Who knows who the downstream winners of AI are going to be in terms of software companies? But I can tell you upstream, names like Broadcom, names like Nvidia will certainly be winners. What we love about those companies is their ability to organically grow their free cash flow. Nvidia, if you can believe it, has grown their free cash flow at 50% a year for a decade. That's
It's
just
pretty impressive.
it's impressive. It's almost unheard of. And you'd think for that growth, you'd be paying an incredibly rich valuation. Its forward price earnings ratio is only 23, 24. So it's a lot less demanding than a lot of the technology companies in Australia.
Okay. Well, how do you and your team stay ahead of market trends and maintain conviction in your investment decisions?
Sure. So we very much like in terms of conviction, we I believe that when the facts change, you've got to change your mind as well. So you've just got to have great systems to enable you to process the vast amounts of information and data that's available today. And I think the winners and losers in fund management will be defined by those that can take that great volume of data that's available, that's never been available before, past the signal from the noise, and develop an investment edge. And that's really Plato has a big edge in that regard. We're a bit unusual as a fund manager. We're 17 investment staff. Every single one of us can code in 3 or 4 languages, very comfortable with technology and data. And that allows us to have the bandwidth to analyze not just a set of 20 companies, which a traditional fund manager, if they're working their absolute socks off, can do, but our bandwidth is well over 10,000 companies, which is a real edge.
Okay. Now, in your view, what makes a great portfolio manager in today's environment?
I think it's timeless what makes a great fund manager, and that's the ability to stay unemotional. Okay, most of the bad decisions I think we all make, whether it's in life or in investing, is when we're under stress or emotional, and so to just stick to the process, stick to the numbers is absolutely key, and that's something that we will always do. If a company looks like its number of red flags is increasing, then no questions asked. If it gets above that magic 8 number, we will sell every single time. So we never fall in love with stocks. Mineral resources, interesting example. We were short mineral resources, had a lot of red flags, poor sentiment, and was a real underperformer. But now they've cleaned up their act. Sentiment has changed in that market. Valuation was a lot more compelling, and we're long. So we certainly will never fall in love with companies and just stick to our tried and tested investment process.
So, while monitoring so many companies in the portfolio and the global universe to invest in, how do you and your team then keep up to date with all the information that's coming through in real time to then adjust the portfolio and make decisions?
Sure. So that's really the name of the game. Like there's a great quote out of IBM that 90% of the data in existence today was only created in the last 3 or so years. So there's almost, whereas 20, 30 years ago, the challenge was getting your hands on useful information. Now there's almost too much information. It's like drinking through a fire hose. But again, that really plays into our skill sets. We're very comfortable with technology and data. We've got 800 different databases that we plug into that give us information on every sector, every industry, every country in the world, and that is all automated, which is a real difference than most traditional fund managers that still operate in spreadsheets and picking up the phone to speak to their mates at brokerage houses, that sort of thing. So, every single industry in the world today has been heavily disrupted by technology. Fund management sometimes can be a bit of a cottage industry, and I think you really need to lean in technology to make your job easier.
Okay. Now, David, you've got a doctor in front of your name. Can you tell us what your thesis was on?
Okay. So I did my PhD at Cambridge in right after the financial crisis, and it's not unusual for people to do PhDs in quite esoteric subjects that won't necessarily be usable for them going forward. But I wanted to do something that was going to be really applicable to my work life. So I looked at ways of building portfolios to develop higher returns with lower risk, lower drawdowns. So something that's really practical and tangible. And we apply those techniques every day. A big focus of what we try and deliver for clients is a smooth journey, a good night's sleep. The longer I've been investing for, the more I've become totally invested. The end investor, they often are a bit like my dad. They think they can take risk. They want a high return, but when they go through a protracted drawdown, a tough period in markets, often they'll capitulate at the worst possible time. So if you can provide that smoother journey through very smart portfolio construction, then I think that's really valuable.
Okay. Well, David, we've covered a lot this morning. Is there anything else you'd like to share with the audience before we leave you?
Really, yeah, I don't think so. I don't think so. Just for those of you who've invested in Plato Global Alpha or the ETF PJ1, just thank you. And I'm fully invested in the fund with all my liquid wealth as well. So very aligned, and thank you for joining us on that journey.
Great. Thanks, David.
Thanks, Joel.
If you'd like to talk to Solace Financial regarding your current financial strategy and whether it's suitable for your goals and objectives, please reach out and contact me via our website or give our office a call to schedule an appointment. It was great to talk to you today, David, and it was great to hear more about Plato and how you run investment portfolios and systematic strategies for clients.